My side, I took 2 ticks on ZB before the news, after 2 p.m. my time, then a scratch, then a loss for 3 ticks on UB, then another scratch, then a 3 ticks winner on UB, and now a whopping another tick on ZB, so up 3 ticks today only. It's always difficult to time while the range is getting defined, still getting defined. You never know, are they gonna extend a bit more or not?
Just an update across markets following the US cash open. The main highlight thus far has been that US CPI report, where both the core and headline came above expectations. The initial reaction seen at the time has mostly held, with equities seeing downside at the open, SPX down about 80 basis points, Nasdaq down about 0.6%, seeing underperformance in the
key level, no?
1.3%. For sectors, they are mostly in the red, healthcare being the exception. In the FX space, the dollar does hold on to gains remaining firmer across the board, with the yen lagging amid higher US yields and to the DNs too lagging on the risk of sentiment, while the Swiss franc and euro are the relative.
Yeah, I see on the heat map as well, whenever we get down here it gets a bit reinforced, and then but still you have some pressure. But I don't know, I feel like we should extend lower still a little bit. I don't know.
7.1 basis points, leaving the T10 spread currently steepening. On crude, WTI is currently down.
Yeah,
to 18 per barrel. Brent trading at 75.96. Updates did include that larger than expected build in last night's API report.
It's weird. I see some similarities with Friday NFP structure. So it just made on that day it just made a 1 tick new low and then back into range. So you know, it's always range but skewed to the downside. If you notice, when we get to the top of the range, they are much more aggressive than from the bottom. From the bottom, it's almost like they slowly move away. But whenever we are there around the 10s, 0.90 smash. I don't know. I'm gonna smoke a cigarette. Ugh. For anybody in the stream, I am talking with a friend. You don't hear his voice for privacy. But yeah, he will also be... He is here.
At the top of the hour in 10 minutes time, we are expecting a text release from Fed's Chair Powell with him to begin his semi-annual testimony before the House. Expectations for the text release are likely to be a reiteration of what we saw yesterday before the Senate, in which he said they do not need to be in a hurry to adjust policy. Also, we are expecting remarks from Bank of England's Green.
Okay, I'm back. One tick.
Pointing out, US White House economic advisor Hassett is currently speaking on Bloomberg. When you're talking about the CPI.
Why ZF and ZT are stronger. Okay, yeah. Still a lot of pressure from above. Mm-hmm. Yes, at 0.50. Let's see. Yeah, the yield is at 465, the top key reference, between 463 and 465. Yeah, they're reinforcing. Some pressure. ZB is pulling a bit at 12. UB is reinforced, the bottom. Oof. Going nowhere without the VN.
Just monitoring some of these remarks Hassett saying on Bloomberg says more energy supply, less rules to help curb inflation. Says we will fix inflation with or without the Fed.
Don't see many big orders buying. Oh no, yeah, something, but
And Hassett just pointing out the 5 to 10 year yield coming down is positive for growth.
honestly, I would like to see the European bonds make the move up before taking longs, and then I can even market in, but since it is a critical level, wow. True. backing off. Bund is still at the lows and not looking for a long. I'd be wrong. UB and ZB tried to go, they are offer, but nobody is buying the offer at 09.
And again, 1 minute to the top of the hour, are looking out for a text release from Fed Chair Powell, and then he's about to begin his testimony before the House. Also looking out for Bank of England's green.
You can see whenever we trade the 0.60, 0.65, the buying volume is very low. It's might be that. In this situation, difficult to enter on a continuation short, but also. Oh, there is some news? Why there is no liquidity anymore? What the Everything is pulled. What the fuck? Ah, yeah, right. He is testifying today as well. Yes, yes. He will give.
Not seen any text release from Fed's Chair Powell.
It is in the central bank and political events. Yes, it is there. Federal Reserve Chairman Jerome Powell delivers semi-annual monetary policy testimony before the House Financial Services Committee in Washington. Because it is a 2-day event. Started yesterday.
Such an island, after all. Desk is currently going through said speech.
Thanks God that we have the book. We see these things.
Which says that the disinflation process is broadly on track. Inflation persistence has been slowly fading in part thanks to a restrictive stance in monetary policy. And Green still believes we are firmly in a case two-state world in which
a couple of hours, I think.
Must open to squeeze remaining inflationary persistence out of the
2 hours probably.
And return inflation sustainably to our 2% target by the end of the forecast period. This
Let me see who it's streaming it.
25 basis point cut in the bank rate. That said,
see Bloomberg live.
around this view of the world have shifted since the beginning of our cutting cycle since late August. Since last August, rather. And for Fed Chair Powell does submit identical remarks to the Committee on Financial Services
Testimony live.
US House of Representatives.
Federal Reserve Chair Powell, this was yesterday on CNBC television.
And more on BOE's. Green believes it is appropriate to maintain a cautious and gradual approach to removing monetary restrictiveness.
Okay, it is on CNBC. No. No, I never found the live stream on. It always is like a 1-hour program, no? And there is so much pressure from above that, man. Hey Brando. Good day. How are you? Mm-hmm.
Just further here from Bank of England's Green says UK may now have a lower threshold
Up
in the
3
short-term
ticks.
inflation rise feeds through to second round effects.
On YouTube, CNBC television. Yeah. I see that there is a live from Bloomberg as well. Yeah, you're right. At least 10 seconds as a base, and then some of them are later. Even the official ones from the official website, like the Fed official stream, is always 10 seconds behind. Yeah. I suspect a very low demand. Mm-mm. Why buy now if I can buy it cheaper if you don't reward me properly, right? UB is doing its own things.
Yeah, is still trending down. It's kind of looking like a mixture of the 5 and the 30. We're likely just going to form our balance lower end. Set. There's no buy up on.
Committee will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. This hearing is titled The Federal Reserve Semi-Annual.
Welcome everybody in the stream. How are you?
Objection, all members will have 5 legislative
Hello, hello Luke.
submit extraneous material
Hello Georgie. Hello Pepe. Ciao.
I will note at the outset that this hearing is a hard stop
Like I said previously, I'm also I'm talking with Brando and Max on the server on a private room. You don't hear them voices for privacy, so it might sound like I'm talking to myself.
Today it takes
Um,
$1.21 to purchase what just cost $1 in January.
we've got Powell
as measured by the
testimony
Consumer Price Index. The erosion
going on right now.
incomes and thereby
He
their
has yet to start talking.
caused by a combination of irresponsible fiscal
We
policy,
formed this range on the yen,
disruptions, but also
but it's
by
very
the
fragile.
Federal Reserve
I
like
think
the last war.
there is still a lot of pressure from above.
Chairman Powell
There's nothing below 0.6 and 0.5,
that the pre-pandemic era of low inflation
so
and low interest rates
just needs a little push
This
from the
case is
cliff.
one of the reasons the Fed changed its monetary policy framework in August 2020, only 7 months before inflation began its 4-decade steep march upward in March of 2021.
But he's starting soon.
So-called flexible average inflation targeting appears ill-timed and ill-fitted for a post-pandemic world. As the Fed undertakes a review of its monetary policy framework, you must account for the lessons of the last 4 years and think about what's ahead over the horizon, not what has been. The Fed has made progress on inflation, but as the last mile
Just in
seems
US
the hardest.
politics,
As Bank
House
America
Republicans have released their proposed budget text. It does include a debt limit increase of $4 trillion. Again, House Republicans have proposed
My live on YouTube.
$1 debt limit increase, with Bloomberg noting that would be an increase of the debt limit of $4 trillion.
No, I don't have it. No.
This morning's confirmation that inflation
Hmm.
is well above the 2% target at 3% and making move upwards, other economic indicators are positive. As you reported yesterday, a low inflation rate, solid GDP growth.
Maybe there's a setting somewhere to set OpenGL or something.
This is not a time to say that there are no risks, but some perhaps unseen. However, these risks in comparison to the risk of a resurgence of inflation present are modest. Given the already high prices due to President Biden's inflation, Americans simply cannot afford further price increases at the grocery store and gas pump. Such a resurgence would likely force the Fed to begin another tightening cycle, making mortgages, credit cards, and small business loans unattainable for many. That's why I urge the Fed to forge ahead with its monetary policy duties until you're confident the mission is complete.
Like I was thinking about it the other day. If I ever needed to replace my graphics card, I have a RTX 70.
This is the reason we formed the Task Force on Monetary Policy, Treasury Market
I run
Resilience,
4
and Economic
monitors.
Prosperity that will be led by Chair Frank Lucas. The Task Force purpose is to ensure that the monetary policy actions of the Fed
I was
put
just
under a
thinking about it. I'm like,
magnifying glass
damn,
and prioritized for this committee. And I look forward to our first hearing of the task force. I now want to turn to some of the other Fed
First off,
responsibilities,
this
bank
graphics card
regulation,
back
and supervision. The Fed was created by Congress to be an independent agency.
It was
The intent
literally
is to insulate the Federal Reserve's monetary policy from political influence.
it's like
Unfortunately, in the last 2.5 years of the Biden administration,
probably around
the Fed took on serious liberties with its independence in the areas of supervision.
Super crazy.
In law, Federal Vice Chair for Supervision is to develop policy recommendations that then are then brought to the Board of Governors.
I got mine for the same price, so used one.
The Board have been too deferential to the statutory Vice Chairman for Supervision. Vice Chair Barr turned the
And just
Basel
as some
III
added
endgame
color behind
rulemaking
his latest
into a
figures
partisan
from the US,
attempt
Jake
to impose a
Sherman
massive
knows
hike
that
on
the
capital
figures
Uh-huh.
being quoted
making
for that
them
debt limit
less
increase
competitive.
would be less
The Fed
than
has a
tax
chance
writers
right
say
now to
they
get
need
back
for
on the
Trump's
right
tax
track
agenda.
and
Just an
preserve
extra
its
color there from
independence
Punchbowl's
for the long-term
Sherman.
benefit of the American people. And with that, I yield back.
1% behind where I was.
Chair recognizes Mr. Lucas, the chair of the Monetary Policy, Treasury Market Resilience, and Economic Prosperity Task Force for 1 minute.
Thank you, Mr. Chairman. While there are differences of approach in this room,
big
my partisan guiding principle is that
Oof.
maximizing economic growth is the path to economic prosperity. It is the single greatest factor in delivering opportunity
But
and quality of life for
looking
folks
at the
back home.
cost of it now, if
The
I ever
actions of the
stick
Federal
with
Reserve
it,
and the machinery of monetary policy play an important role in economic stability. With the 5-year review of the monetary policy framework underway, I hope this will be an opportunity to evaluate the effectiveness of the Fed's toolkit and its vast influence on the lives of every American. The creation of the new monetary policy, treasury market resilience, and economic prosperity task force will afford us the opportunity to dive deeper into this topic. Chairman Powell, thank you for being here. There are real issues.
The 4060 has a similar performance to the 1080.
Gentleman yields back. The chair recognizes Mr. Vargas, the ranking member of the Monetary Policy, Treasury Market Resilience, and Economic Prosperity Task Force.
Plus, like, damn.
Thank you very much, Mr. Chairman, and thank you, Ranking Member. And thank you, Chairman Powell, both for your years of public service and for appearing before our committee today. As a ranking member of the newly formed Monetary Policy, Treasury Market Resilience, and Economic Prosperity Task Force, I look forward to working with Chairman Lucas and the rest of my colleagues to address this important issue. The research is clear. Independent central banks perform better in carrying out their mandates than politically motivated central banks. The independence of the Federal Reserve is crucial to achievement of this dual mandate goals to maintain both maximum employment and stable prices. And although this dual mandate has been criticized by some, it continues to serve Americans well. It has not prevented the Fed from making substantial progress on driving down inflation, all the while avoiding a recession, which many saw as inevitable. I look forward to your testimony, Chairman Powell, and I yield back.
Gentleman yields back. I'd like to turn to the gentleman from Michigan and yield to him for a point of personal privilege. Mr. Heisman.
Thank you, Chairman Hill. And as we all know, all good things.
The trading software doesn't use almost nothing of the GPU, 1-2%.
It's been an integral part of the oversight work Republicans have done over the last 5 years.
I thought that Bookmap was using a lot of GPU, and it should, but it probably goes up to 5% at max. Let's hope more. In the end, it's just numbers, no?
Something that we all should aspire to achieve. And Nicole has effectively served in various roles, from a professional staff member right out of law school to now Deputy General Counsel in this particular Congress. And her time with the committee, Nicole has worked on or led investigations into Sam Bankman-Fried, the bank.
I got the i5 13600K.
Corruption at the FDIC and the SEC's climate disclosure rule, just to name a few. And I've sat through her questioning, and it's fierce and tenacious and directed. Myself, my team, and frankly the whole Financial Services Committee.
Oh, that's a cool one.
Nicole enough for her work and what she has done on behalf of this organization. And like all good
Just seen
staffers,
here, according
she
to
has
Bloomberg,
become
EU
confidant,
nations, they're pushing to
sounding
relax gas
board,
storage targets
has the
amid
ability
the
to
price
say,
rally.
in a very nice
Again,
way,
EU nations are
but in
pushing
a
to
very
relax the
tough
gas
way
storage
as well.
target amid the
And
price rally,
although Nicole
according
will
to
be leaving the
Bloomberg.
committee, her contributions will not be forgotten and are deeply cherished. So thank you, Nicole.
The Ramel.
Mr. Chairman, we welcome your testimony. Chairman Powell, you'll be recognized for 5 minutes to give an oral
Back in a
presentation
second,
of your
guys.
testimony. Without objection, your written statement will be made part of
Just
the
in terms
record.
of specific
So, guys, in the stream,
nations is pushing the European Commission to allow more flexibility in reporting requirements against
doing nothing right now because Powell is gonna talk very soon.
raised concerns about the cost of meeting the current target.
Probably there is this.
Article goes on to
The meeting is already going, but he didn't talk yet,
using of targets designed to
and we're just crunching the lows slowly. As you can see, there is a lot of selling pressure from above. It might squeeze at a certain point. There you go. Here's a squeeze probably coming.
Inflation has moved much closer to our 2%.
Apart from that for today, let me show you. So
I will review the current economic situation before
I got 2 ticks before the actual CPI. Then I had a loss on UB that I just got ticked out for -3, 2 scratches, and then 3 tick.
suggested economic activity has continued to
This was on 2 lots, a short on UB, and another short on ZB for just one tick. Taking it cautiously today. Yesterday in the end I had just another trade toward the end. A short from the top of the yesterday range. And so the stats are, despite that big losing day, stupid error last week, are starting to look better again. If I continue on this path, I'm gonna get above 1.5 profit factor soon. And Sharp is getting better by now. Overall, the challenge is at 31% complete. Trying to push it a little bit more toward from now to the end of the week. We have the 10-year auction today at 6 p.m. UK time. That should also bring up some volatility. I expect very low demand for the 10-year bonds notes, because you know, if I am an investor and I'm buying the notes now at this price, while I know there is a huge inflation risk, why buy it now if it can go on discount later, right? So I would be demanding a bigger reward if I'm taking the risk now to compensate for that, right? So we'll see. That's just a thought. But yeah, overall.
Approved a build at 8 spot 64 million. Private, that was a build of 9 million. For distillate, price expected to draw 1 spot 539 million. Gives a prior draw of 5 spot 471 million. Private with a draw of 600,000. For gasoline, that's expected to build 1 spot 403 million.
This everything needs to
Private, that was a draw of 2
to move away from the bottoms. Huge, probably the bond. I would like to see the bond leading if we are even moving higher, no? Not saying that we will, but for that to happen, I would see. Oh, the shots is buying. Give me a second.
As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we can ease policy accordingly. We are attentive to the risks to both sides of our dual mandate, and policy is well positioned to deal with the risks and uncertainties that we face. This year, we're conducting our second periodic review of our monetary policy strategy, tools, and communications, the framework used to pursue our congressionally assigned goals. The focus of this review is on the FOMC's stated on longer-run goals of monetary policy strategy, which articulate
Slightly moving away. Sorry, my girlfriend was going out to work.
Our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country.
Fed the chair, Powell just repeats everything that he said already yesterday. He's parroting, nothing new for now, and new probably they will after the testimony they will ask him his opinion on today's CPI, and he will just repeat what the current narrative is, and don't expect anything new. I mean, they are right in their stance overall, so there's no change. If we take a look, where the hell?
Good morning, everyone. Welcome Chair Powell to our
Yeah, I do
of an economic disaster unlike anything we've seen recently. Trump promised lower prices for working class families. We're seeing the exact opposite. In fact, grocery prices are rising. According to the Labor Department, eggs are up 40%, more expensive than they were even a year ago. In my home state of California, we've seen eggs as high as $9 and more for a dozen. Inflation is rising, and it is up to 3% for the first time since June. And other staples are about to get more expensive as Trump levies new taxes on steel and aluminum. America's consumers and businesses are facing uncertainty and chaos. This is all because Trump and his unelected billionaire co-president Elon Musk are taking a sledgehammer to our economy and democracy.
We've just seen here from Trump economic advisor Hassett says reciprocal tariffs are work in progress and conversations with other nations began earlier today. Again, that's Trump economic advisor Hassett
Oh,
says
yields are dropping, yields are dropping, yields are dropping.
with other countries began earlier today.
Yields are dropping a bit.
See a significant pickup based on
I'm looking for a long. Oh shit. Powell is just parroting the testimony from yesterday, so I guess we are waiting for the questions. So they will ask him for his view on today's CPI. I chased the long and they're likely going to pay the price. Very likely.
Taxes on U.S. companies that will increase the cost of groceries and other basic supplies for all. Trump is freezing funds for housing assistance and community development and whittling down the federal workforce so that his billionaire boys club.
What a bad decision it was to try too long.
These workers' salaries into their own pockets.
Maybe, okay, it paid me. Oh, thank you. Wow, I chased it a lot because I followed the pickup and play in pace. I saw the 30 years yields breaking that range. Both ZB and UB. UB paid me. 2 lots on ZB, on UB and 1 on ZB. On ZB I scratched and UB paid me 1 tick. Ah, fuck, I should have. You never know, no. Better safe, no. They're slowly eating the orders at 0.6. Part of it is pulling. Really need the European bonds to participate, I think. Yeah, if they ask him the wrong question, we're gonna sweep here and there like crazy.
Let me start with the Fed's bank regulation and supervisory function. As I mentioned in my opening statement, over the past 2.5 years, the outgoing Vice Chair for Supervision has pushed new regulations that would move the United States towards a one-size-fits-all approach to prudential regulation that disregards the congressional mandate that's been quite clearly established for regulators to tailor bank regulation based on an institution's size, complexity, and risk profile. Earlier this year, the Fed board announced
above or below?
stepping down from his position as vice chair on February.
And there's that boy on the POC at 0.7.
Just over the Q&A segment of Powell's testimony on underway. Some of the opening remarks just doing the rounds in response to a question about regulation. Powell says the Fed will carry on with regulation and supervision.
Brando, you say that that you are trading the Japanese bonds. Did I understand correctly?
Wait around for a vice chair for supervision. Do you agree that it's the board of governors that has the responsibility for bank supervision policy?
Yeah,
I do, and
I think that soon I'm going to do the same.
carry on with our regulatory and supervisory duties. We can't take a holiday, and we will proceed with the things that we should be proceeding with.
You testified in the Senate yesterday, and I know you enjoyed time with the senators, and you talked a little bit about
And
Basel
Powell
III
notes there is
endgame.
no plan.
And again,
Sorry,
in my opening statement, I talked
they
about
plan
that the
to
intent was to
repropose
harmonize
a Basel
true
III
for
endgame.
the largest
And Powell says
institutions
plan
in the
to
world,
repropose a
but also
Basel
do
III
that in a way
endgame.
that's capital neutral. And many of us here in Congress on both sides
Just
of
under
the
a
Oh,
minute
wow.
on those DOE crude oil
Ours
inventories. The
approach
headline
gold
that's expected to
plating
build
already
3
high
spots,
standards
0
for
to 8
American
million.
banks.
To bear in mind,
Justified
private last night was a
yesterday
larger
that you
build of 9
bank
million.
capital levels are about right for those large institutions. Would you tell the
And
committee
Powell
today
now
that it's
speaking
your
on the
intent to
banking sector,
repropose
noting that
the
capital
Basel
for
III
banks is
endgame
about
approach,
right.
just speaking on behalf of the Fed only, not the other
Oh.
supervisors, and that it be
It's worse,
taking into account the
and they are
concerns
volatile, I
be
imagine.
generally capital neutral.
We do intend to repropose Basel III endgame,
Mm-hmm.
and we intend to do that just as soon as we can get together with the new leadership at the two other banking agencies. And as I mentioned, I think we
Ah,
can
okay,
respond
okay.
promptly once
So it's not like Buxel.
forward to doing that. My long-held view of many of these hearings is that capital in the banking system for the largest banks
That's a
is
build
at
of a
about
4.07 million,
And that
build
would
of
be my
4.07
starting
million,
point going into these
distillate
discussions,
builds
but I do wanna defer-
135,000,
I do wanna,
gasoline that's a draw of 3.035 million,
coming
refined utilization
leadership
0.5%,
Ah, the yes, okay.
I think that's
72,000,
important. I think it needs
and
to
for
be
crude production
made
last
harmonized
week,
among our
observed
supervisory
at
agencies. And I do
16,000
want you
barrels
to
per
take
day
into account
to
how
13 spots
Basel III
494
endgame
million barrels per
proposal
day.
interacts
Just
with
go back over
other
the data then, that was a
whether
larger
they're
than
on
expected build, but
liquidity or
smaller than that
the,
of the private inventories. Then we saw
things
an
like
unexpected
operating risk
build
in
in
the company.
distillate,
So I think that was a
an
lot of
unexpected draw
centrality
in
of the comments
gasoline,
that we
refined
saw
utilization that was
on
a
your
touch above
bar
expected.
proposal.
In terms of follow through for
Turning
crude
to
space, I've seen
monetary
some
policy,
marginal upticks,
looking back
but very
into
much within
2020
recent
and
ranges.
2021, I was looking at all the principal monetary policy rules that you report in your semi-annual report. And had you followed any of the monetary policy rules that you track, they would have had you tighten sooner in the cycle rather than
In the morning on the Bund, I got
could have
a fantastic 2 ticks today. 2 ticks. I pushed it out. I 2 ticks with 3 lots. Yeah, I always use.
I will say, and I've said before, that hindsight suggests that it would have been good if we had tightened.
I pushed it out, and then it would have been a bigger win, but
Those rules in the middle of
yeah, I don't know. I didn't feel like
policy rate was a couple hundred basis points too high.
really good still today.
So we need to.
This
They're a starting point, not an ending point.
Right.
Fed Chair Powell just noting that they will make appropriate and discrete adjustments to the Fed's framework.
So
Policy reports, except for one time during the pandemic.
no.
And I think though that you're
So Brando, I don't know if you Brando, you don't know if you heard the question about the Japanese bonds. Are you trading them?
important. Can you tell us about the review of the inflation targeting and when do you expect to complete that?
Expect to complete it by the late in the summer this year. We're just beginning it now, and we're going to look at all the decisions that we made, why we made them back in 2020. We're going to ask ourselves what's changed. We're going to be open to criticism and good ways of thinking about it, and I think we'll make appropriate, discrete adjustments.
I thank you for being with us today.
Mhm.
Turn to the ranking member of the full committee, Mrs. Waters, for 5 minutes for your questions.
Thank you very much, Mr. Chairman. It is no secret that President Trump
Yeah, I've been
wants to do
experimenting with the
that he wants
Japanese
to do away
bonds,
with the Federal
I
Reserve
forgot
altogether.
that
He said he knows interest rates
you're
much
not
better
allowed
than
to
you do.
trade them.
I want you to know that some of us here have been fighting to make sure.
It's on the
everybody
Osaka
understands the
exchange,
importance
and
of the central
Further
bank.
from Fed Chair Powell says there's no changes to his own commitments that he will not resign if asked to by US
Mhm.
President Trump.
Of course, Trump and the opposite side of the aisle fought to come together with a bipartisan agreement on stablecoins. You previously said that you would not resign if Trump asked you to do that. Do you stand by that commitment?
I have no changes to that.
I can't hear you.
Yes.
Thank you. Please let the record record that adequately. I appreciate that because you have a right to your position not to be interfered with by law, I believe, or even Constitution. When Musk comes knocking at the Fed's door, you gonna let him in?
I don't have anything for you on that.
Would you like to tell us today that you won't let Doge into the Federal Reserve or have access to the systems and the data?
So I don't have any, we've had no contact, and I don't really have, I have nothing for you to report today on that.
Well, you know what happened at Treasury, and you know what happened over at the NPD, and the people of this country are being violated because all of our privacy is being taken up by Elon Musk and Trump, and we don't know what all they have on us, our bank accounts, everything that in our lives. So I want to protect it in the Fed. Mr. Powell, the last time you testified before this committee, you said, and I quote, really successful institutions in the United States generally are those that do a really good job on diversity and get the best out of people and attract a broad, diverse range of talents to the table. That is the way we feel about it. And at the Fed, that is what we've been doing and will continue to do. Chair Powell, how will you ensure that the Fed continues to attract the best and most diverse employees?
Yeah, see, the reason why
Institutions like ours, private and public, are in a constant contest to hire the best talent in the country. And we've all learned, I think, and certainly we have, that we will go anywhere to find that talent, and including places that we didn't go 25 years ago. And we'll just continue to do that. You know, we're recruiting, as you know, at many universities and colleges, including historically black universities and colleges, and others. And that's what we find, and that's our practice. We think that's the best way to go about it.
Thank you very much, and that's what I've always felt about the Fed. No matter what they call it, you only attracted and hired the best qualified people in your operation, no matter what they refer to it as, what they call it,
prior.
the way they divide it. Is that right?
However, the bid to ask
Thank
is
you very
actually
much.
still
Chair Powell, are you willing to provide my staff with an immediate briefing from your agency on the status of your OMWEs and equal employment offices?
Yes.
Thank you. I believe that you know that the OMWEs were created with the Dodd-Frank reforms. It's in
I
law.
would say it's
And as
since
I
it's not really
understand
as
it,
popular
any
of a
attempts
market,
to
I would
dismantle
honestly kind of
OMWEs
avoid it.
would have to come before the Congress of the United States of America. Is that your understanding?
Well, yes. Section 342 of Dodd-Frank, which is the OMWE section, is the law.
Thank you. Chair Powell, to what extent have you consulted with other board members in determining how your agency is complying with Section 342 of Dodd-Frank and as well as any other federal anti-discrimination law?
That's true.
I think we've consulted with senior staff and board members quite a bit.
The risk off here.
Chair Powell, days after his inauguration, President Trump issued an executive order on
I
digital
have
assets,
actually
which
traded
imposed a
Canadian
on
a
central
little bit
bank
on
digital
IBKR.
currency, or CBDCs. The executive order banned
Really?
any quote form of digital
You're
money
in Canada.
or monetary value denominated
Mm-mm.
in the national unit of
Like,
account.
I
That is a
thought, like,
direct
it's
liability of
like
central bank.
volume, like,
End quote. I'm concerned that this
Well,
extremely broad definition
well,
will go far beyond
really
CBDCs.
straightforward.
Well, thank you very much. Our time is up, but I appreciate your presence here today, and I appreciate your willingness to stand up
Canada.
for your right
Gentlewoman's
to be the
time
chair.
has expired.
And
But
I now yield.
Should actually trade.
But I do invite the chairman to
We've,
respond to the gentlewoman's
we've,
question on
been
CBDCs in writing. And now we turn to the vice chair of the full committee, Bill Heisner, the gentleman from Michigan.
Thank you, Mr. Chairman, and Chair Powell. Good to see you again. You had talked a little bit about your
Damn.
review. I'm going to start there. Obviously, a lot has changed in the last 5 years. Pandemic, inflation, higher interest rates, name a few. However, I believe your dual mandate of maximum employment
Very
safety
thick,
prices should
very
remain
slow.
objective. I assume you agree with that. I'd let the record reflect a slight head nod on that. This committee is going to be very focused on monetary policy, and with my good friend from Oklahoma, Mr. Lucas, chairing a task force that I'm happy to be a part of. We're going to be addressing some of those issues. Chair Hill touched on some of the rules that have been discussed. For one,
If you get a feel on bubble, you are. It is probably because the bid or the offer is swept. No, you are always on the end of the queue.
But there needed to be some sort of public
Is that shit?
to benchmark against, and I still feel that is of some importance.
Some
Bloomberg, EU trade chiefs are talking to a Trump team on finding a solution to tariffs. Bloomberg notes that EU trade chiefs talking to the Trump team in order to find a tariff solution.
Inflation, something that you and I have talked about over the years.
No, I'll tell you why we didn't raise rates. We thought the inflation was transitory. I can show you forecasts from the end of 2021.
I need a coffee soon. I really cannot decide what.
Everybody thought it was going to be transitory. That's why we didn't raise rates.
And I also distinctly remember a hearing where you and Secretary Yellen at the time were sitting next to each other, and it looked like you visibly scooted away when I asked you both whether it was still transitory, and you had, for the first time ever, a separate answer. Her answer was yes, it still was transitory.
Yeah, me too. I'm gonna take a coffee.
Fed speak answer of, we no longer believe the data shows that, so no. And to kind of go to Chair Hill's point, we think that might have been a little late on that. On back to the review, I'm curious, what sort of input are you looking for?
It doesn't even have to be something crazy. You can just say that the Fed.
So from the public, we'll do a series of Fed listens and very successful. I mean, it involves sitting down and meeting with people.
Nothing crazy.
Nothing crazy. No. Like, wow, what would happen with machine?
We'll keep you informed of our progress. We welcome anything you may offer. But it's a public. We're open to the public on this. It's a public review.
But I was thinking the other day, imagine if the situation gets out of control for some reason or another, and they are forced like to cut to zero again, like from one meeting to another, out of nowhere. Imagine, wow.
His position as vice chair for supervision effectively at the end of the month, and whether, frankly, President Trump fills that position is entirely up to him. But in the absence of a vice chair for supervision, you're still working on it. Your quote to the chairman was, "There's no time for a holiday." Now, this vice chair of supervision is a Fed governor that has, frankly, extra
0.
powers and responsibilities. And ultimately, my question to you is, does the Fed really need a separate vice chair to complete its work? Now, I got here in after the 2010 election, 2011, shortly after Dodd-Frank was passed. I know this vice chair position was created by Dodd-Frank. I've just been dealing with the echo effects now for the last going on 15 years of Dodd-Frank. Do we really need to have a separate vice chair of supervision?
The next longest while.
So for many years, as you know, we did
Probably for the whole year.
for supervision. What that means is everything goes
Even
full
like
board.
And it was effective?
I think it was, and also there was less volatility.
Explain that. Why was there less volatility?
Well, because you've got a group of 7 people on the board, and there will be some as appointments change. There'll be some
F?
in the approach to
Was it
regulation.
N?
Putting it all in a
N,
single person,
probably.
admittedly just to recommend to the board, can lead to sort of some volatility in these things, which is really
Larger swings in
larger
policy.
swings in the kind of things, and that's not great for the institutions that we want to regulate. We want to have a good set of regulation that doesn't swing back and forth very much. The question of whether it's a good thing to have in the law is really one for you. But I will tell you, we will once Vice Chair Barr completes his term
Oh, wow.
in a few weeks, we will continue.
Actually,
until there's a new Vice Chair.
the 2 year is
Let's get our work done.
recovered much more than the belly and the back.
Yields back. Recognize the gentleman from
Just in terms of
California.
survey
Cannot
data,
concentrate with this, with Powell talking, I don't know with.
but just continue to clamber further off the lows. E-mini S&P down 0.5%. In FX space, the dollar index is still just around positive territory, sitting above the 108 mark, but definitely post-CPI news have favoured euro dollar just continuing its reverse course. Euro has been one of the strong performers around the session. Nonetheless, though, it's just worth acknowledging that yields, they do continue to return their upside, and then in the crude space, prices have picked up a touch off the lows. We are still very much low on the session.
Mentions the importance of your dual mandate. Project 2025 calls for abolishing the dual mandate and eliminating a mandate that you focus on employment. If we were to give you just one mandate dealing with price stability and take away the mandate on employment, over the next 10 years, would our GDP be higher or lower?
It wouldn't be possible.
Market is expecting.
Does the fact that you focus on employment as one of your tool mandates lead to lower unemployment, higher employment in our country?
It may do so. We do balance those things. To some extent, that may be right.
Chair Hill spoke about how important it is that you maintain your
the Fed makes its decisions based on what's happening in the economy.
In light of the hiring freeze, the Fed has removed all its job postings. I'm hoping that your personnel policy will be as independent as everything else at the Fed. But I'm more concerned with the president's statement at 7:58 this morning, where he said interest rates should be lower. He said it. Will that influence what the Fed actually does?
The nominal yield of that
As a practice, never comment on anything the president says, but I think
spread
people can be confident that we'll continue to keep our heads down, do our work, make our decisions based on what's happening in the economy, the outlook, the balance.
Statements by elected officials are not among the things that cause you to act one way or the other.
I believe I would do.
And he went on to say, he said interest rates should be lowered, something which would go hand in hand with upcoming tariffs. Let's rock and roll America. I certainly agree with the rock and roll America, but the Peterson Institute says that the policies that the president ran on will raise the CPI by between 4 and 7.5 points.
Yield rate is actually
and I think the biggest element of that is the proposed tariffs. If we have higher tariffs across the board, say
The tips, no?
10 to 25%, would that
The inflation adjusted yield, no?
CPI or related indexes of the cost of living lead to higher interest rates?
You know, there are many organizations, public and private, whose role it is to speculate publicly about what this might be. What we're doing is we're reserving
From Fed Chair Powell says the Fed is reserving judgment on the likely effect of tariffs until it sees the policies.
Higher interest rates, CPI goes up or CPE,
Well, if inflation goes up in general, forget about tariffs. In general, of course, we will use our tools, which is the interest rate, to bring it back down to 2% over time.
Okay. Yesterday, you told the Senate we're going to release the stress test scenarios before we implement them. Will you take a holistic look at large bank capital requirements, including the risk-based capital ratios like Basel III Endgame, stress testing, to make sure that you don't have a contraction in the ability of credit?
We should, but I never found the the damn LYC.
If there was no explicit or implicit federal guarantee for those who invest in mortgages, would that lead to higher mortgage interest rates?
Oh.
Since you'd no longer be borrowing on the credit of the United States, in other words, so Fannie and Freddie would be privately funded, it could lead to that. I think privatizing Freddie and Fannie might have other virtues too, though, has been considered many times by this committee and others.
Might have some virtues, but it would lead to higher mortgage rates.
It could.
But it gives me an RIC,
CCD has been
but that
put on ice, but all the regulations remain in force. So So if you're a bank that wants to comply with those regulations, there's nobody that can give you any clarification. So you don't know. And if you're a bank that doesn't want to comply, the next presidential election may put into practice a CFP.
Friends, in the stream on YouTube, this is probably the most boring.
Does that cause confusion for banks?
You're speculating about what the situation might be. I would say that it could.
Yield back.
Gentleman yields back. I now recognize myself for 5 minutes.
Let me see. 30 minutes ago. Yes. At 04. Around 04 and 045. But they are reinforcing now.
Fed Chair Powell says they want reserves to be ample. Fed Chair
I
Powell
didn't
says
even
reserves
notice.
to be ample.
Allowing the treasuries to roll off. Fed is careful to ensure that there are
Comes here
ample
from
reserves
Canadian
on the
PM
balance sheet.
Trudeau says that Canada will, if needs be, pause its response to any US
Mhm.
tariffs.
Sure. So
And just going back to comments here from Fed Chair Powell says all evidence does suggest that reserves are abundant.
stop the process of shrinking our balance sheet at a time when we think that
All evidence suggests reserves are abundant. Nothing good happens when there's not enough liquidity. Yeah, because they are depleted their what is that? Their repo. I don't remember.
nothing good happens when there are not enough liquidity. So that's our overall framework. And right now we feel like
Right, I'm taking a break and getting a coffee.
As you know, in early 2021, the Fed stated that it would invite comments on the supplemental.
I really hope less, man. Oh my god. I want to trade normally. See ya. I'll be here when you're back.
When former Treasury Secretary Yellen
See ya.
before this committee last year asked her about the resiliency of the Treasury market, specifically about the wisdom of permanently modifying the SLR. She said it's something that the banking regulator should consider. Does the Fed plan to finally look at the SLR?
Yes, I believe we will. I have, for a long time, like others, been somewhat concerned about the levels of liquidity in the Treasury market. The amount of Treasuries has grown much faster than the intermediation capacity has grown. And one obvious thing to do is to
Just a bit further on Fed Chair Powell says, I expect we will return to issue of lowering
supplemental
SLR.
leverage ratio, the bindingness of it. So that's something I do expect we will return to and work on with our new colleagues at the other agencies and get done.
Because I think my colleagues are aware that over the course of recent times, literally we have 8 times as much debt to process, but only half as many major market makers. The Federal Reserve is not immune to politics. You, like every Fed governor, go through a lengthy confirmation process in the Senate. And of course, you're required to answer to Congress in hearings like this. I can trace a major political turning point at the Fed to the passage of Dodd-Frank, which greatly expanded the Fed's regulation and supervision authority. Chairman Powell, do you worry that the independence of the Federal Reserve's monetary policy function is any way hindered by its role as a bank regulator? Can you do both?
Well, we can and we do, and we'll continue to do that. Clearly, the regulatory and supervisory side is more contentious in political circles, but we will continue to carry it out as best we can and to do so in a non-political way as best we can.
And clearly that'll be a major discussion topic in the task force. In my remaining time, could you discuss the Fed's 5-year review of monetary policy? What are the categories of issues you think that will be helpful to receive feedback on?
So a good part of it will be looking at the changes we made in 2020, which were made in an environment where we had been stuck at the effective lower bound at 0 for 7 years. And the highest we got our rate really was sustainably was 1.5%, and that was the highest of any advanced economy central bank. So the concern was that at the slightest downturn, we'd be back at the 0 lower bound and we'd be stuck. So we were looking for ways to make up for that. So then the question is, we got this inflation out of the pandemic and the events related to it. Are a different place now. And I think the chances are pretty good that maybe that the effective lower bound is still a concern, but it's not the base case anymore. So we need to look at that and decide what are the implications of that for our framework.
Thank you, Chairman, and I look forward to several more discussions on these topics. And with that, I yield back the balance of my time, and I recognize the gentleman from New York, Mr. Meeks, for 5 minutes.
Thank you, Mr. Chairman. Chair Powell, thank you for being here today, and you've indicated in past hearings that geopolitical tensions pose important risks to global economic activity. Back around this time last year when you appeared before the committee, you and I discussed how conflicts around the world, specifically the war in Ukraine, had impacted the cost of things like groceries in the United States of America. At that time, you indicated that the war had caused commodity prices to move sharply back home. Does that sound correct to you, or unfamiliar to you?
Yes, it does.
So, just to reiterate, in this interconnected world that we live in, would it be safe to say that economic instability in other countries has the potential to impact economic factors here in the United States?
Sometimes, yes.
And so, given that fact, would it seem like a smart move for the United States government to remove one of our most effective strategic tools that, by mandate, assist U.S. commercial interests by supporting developing countries' economic growth and building countries' capacity to participate in the world trade? Would you agree with that?
It's not for me to be the judge or to say on that.
So, we do know that a number of, like USAID, they buy a lot of their agricultural products, etc., from American farmers. And in fact, it helps the U.S. economy when you look at the volume of agricultural products that are being bought so that we can continue to be a part of the rest of the world. Would that be correct?
As far as I know, yes.
So, today we find ourselves facing a situation where the president and his Dodge buddy Elon Musk seem hell-bent on dismantling USAID, no matter the consequences, even if they are dire. To me, the assault on this congressionally authorized body represents an attack on the rule of law and should outrage every member of this body. Every member, Democrats and Republicans alike. And I know that your interest is squarely within your dual mandate and not foreign policy. I sit on both committees. I'm here, but I'm also the ranking member on the Foreign Policy Committee. And so I can't sit here today and pretend that what we're doing won't impact employment and economic stability right here in the United States of America. Weakening USAID will fuel global crises, endanger American security, embolden other nations like China and Russia, and leave us here in the Trump administration solely responsible for the fallout. So I have to take this opportunity to urge my colleagues on the other side of the aisle to also stand up for USAID. Anytime we travel, we go visit what they do. We go visit the good that they do. We go visit what and how their economies improve so that they can be part of the global economy. So, if not because people just care about the rest of the world, then because we care about our country and recognize that instability elsewhere threatens our stability right here. It is extremely important in an interconnected world because the economy is interconnected around the world. We cannot isolate ourselves from the rest of the world. Thank you, Mr. Chairman, and I yield back the balance of my time.
Gentleman yields back. The chair recognizes the gentleman from Texas, Mr. Sessions, for 5 minutes.
Mr. Chairman, thank you very much. Chairman Powell, welcome. We're delighted to be here, and I hope that this comes with greetings from every single member that we appreciate and respect you taking the time, even though you're expected here. We think you show up, and we admire you. Mr. Chairman, you and I both know that way back when, and we assume 21, that there was a decision made by the Fed that gets close to quantitative easing and then the term tapering. And we know that it was sold as a monetary stimulus to help the country, and I get that. There was about, in my opinion, $2.33 trillion that were taken out in loans. And Chairman just spoke a minute ago about the term debt versus growth. Debt versus growth, about this amount of money that sits out there on the debt side. Could you please take a minute and discuss this issue and how we should be looking at it? Thank you.
Sorry, Mr. Sessions, are we talking about asset purchases that we made during
We are. We're talking about when the Fed went and sold treasuries.
No, we bought treasuries.
Bought treasuries.
Yeah, we bought treasuries. So, it was a situation. I'll tell you why we did it. We were just out of the worst part of the pandemic, and we didn't know frankly, how good things were going to be, how strong the economy. We were very concerned. COVID is still raging, and it actually, had a very strong wave right into 22. But we wanted to we didn't want to.
Oh yeah, you.
Buying treasuries too soon, because that has a stimulative effect, because we didn't want to provoke an unwanted tightening in financial conditions at a time when we thought the economy was still vulnerable. If you look back in hindsight, we probably could have done that earlier and halted purchase earlier. In any case, we turned right around and started shrinking the balance sheet. And
You moved it from about 120 a month to 110.
We're down now. We've been tapering for 2 years now, and we're down more than $2 trillion. So we're still.
Yeah, sorry guys, today is a really boring stream probably. Not that the others were full of emotions or a lot of stuff.
Because we believe the debt remains and the growth is not equaling that ability to pay back.
So what happens is we borrow money to cover the spending that Congress has done. Our purchases don't affect that. We're basically issuing reserves, which is cash, and we're retiring Treasury securities. And the effect of that is to drive down long-term rates. That's the whole reason for QE.
What are you paying for those long-term rates?
Market rates. We're paying exactly the market.
Unless Powell says anything, there's money to be honest around here, but no.
Now we're shrinking now, but we are paying, the 10-year was yielding a very, very low yield when it was quite low during the pandemic, extremely low, because growth was slow. There was a lot of demand for treasuries, so we were pushing down rates to support economic activity. When you can't lower your policy rate anymore and you want to do more stimulus, that's really the main thing you can do. Is actually the forefather of that was Milton Friedman, came up with that thought way back in the past. But that's
Just seeing Powell reiterate, he does seem to have a ways to go on balance sheet reduction.
Getting reinforced along here.
Halted QE earlier.
You have shrunk it $2 trillion.
Yes, we have.
And what do you believe remains, and you believe you're now stable for moving forward?
So I think we have a ways to go. Actually, the level of reserves.
Just seeing Cleveland
thing we're
Fed
focused
CPI,
on
that's
hasn't really
0.3%,
changed. All of that
unchanged
has
from the
come
prior
out of what's called the
0.3%.
overnight reverse repo facility. I'd be happy to spend some time with you on this. This stuff is very complicated.
Yes, I've tried to find new data on it, and the last I found really was a CRS report of 22. So what's
very, very big changes since
127.22. So the changes that you speak of are important. And so I would appreciate that time.
Be happy to do that.
I want to thank you for being here. The confidence that the American people have that we will turn not just the economics of their lives, but of the country is very important. And I today spoke about the country, and I want to thank you for your service and time. Mr. Chairman, I yield back.
Gentleman yields back. The chair now recognizes Georgia, Mr. Scott for 5 minutes.
Thank you very much, Chairman, and welcome, Chair Powell. Chair Powell, I'm worried about these tariffs, and I want you to kind of share with us your thoughts on these tariffs. I'm worried about, I think the president is wrong here. Tariffs can cause a terrible situation to the economy. I'm concerned about the inflationary impact on tariffs. And where cost increases from the tariffs, there's a cost to these tariffs. And we need not move into this area.
Super sluggish price action.
And some of these costs will be absorbed by business companies, but there are other costs that will be borne by the American consumers. We don't even understand this. And yet you have the president just using these tariffs.
I was asked today how I do prepare for a major economic release. Just get an idea of what the expectations are from multiple sources. You can find them around the forecast. And then there are more detailed sources you can find maybe on Twitter, on X, or I use some publications on Substack as well, from economists or people that know much better than me. So I just get an idea of if the report comes in much hotter or much weaker than expected. Then I just wait for the effect of it and try to act accordingly.
And these tariffs are going to just add to inflation, like a rocket ship. Your thoughts?
So,
Yeah, this guy is so slow.
Give us your opinion of the danger of these. There's a cost here. Tell us what you think about this.
The president has certain authorities over tariffs. Congress has authorities over tariffs.
Powell says we cannot know how the economy will evolve until we know what the policies are.
But the Fed has no role in setting tariffs, and we don't comment on decisions made by those who do have that authority. We try to stick to our own knitting. In this particular case, it's possible that the economy would evolve in ways that, because of tariffs, or partly because of tariffs, that we would need to do something with our policy rate, but we can't know what that is until we actually know what policies are enacted. And remember, it's not just tariffs. There are significant changes to immigration policy, fiscal policy, and also regulatory policy. You put all four of those, and all four of those were things that the president was elected to do. We will then try to make an intelligent judgment about the overall effect on the economy of those, and conduct our policy accordingly. But it's not our role in any way to comment on the wisdom of the policies that are enacted by Congress or by the administration.
Will he have an effect on whether or not you will resume your plan to
Powell, there is uncertainty over policy.
the interest rates this year,
I've turned the volume off almost, so I don't hear it in the speech. I'm just reading the headlines.
The data that we see, the outlook, the evolving outlook, and the balance of risks, and we'll be considering all of those things. We won't be focusing.
We're moving away. It's like me try long up down here. Good position. UB already moved a lot. It's risky. Super risky. Position is decent. There was actually some reinforcements and the yields backed off.
Many things, and this nation is grateful that we have you, your wisdom and intellect at this time.
I agree, but the gentleman's time has expired. Chair now recognizes the gentlelady from Missouri. Ms. Jagger.
I thank the chair, and it's good to see you again, Chairman Powell. Chair Powell, under the Biden administration, American families were hit.
The yen is buying, lucky. UB will follow along. Got a lot of bits behind me now. Cool pull whenever it needs needed.
The average Missouri household is paying about $1,100 more per month due to inflation. To put that number into perspective, the median family income in Missouri is $69,000. These families have had to spend $13,000 more of their annual income on the exact.
Giving it a chance or not?
But not there on inflation. Today's inflation print says that as well. Wants to keep policy restrictive for now.
So the best thing we can do for Americans is to vigorously pursue both stable prices.
Everything is selling, but
we're trying to get back to a long expansion.
EU is buying and the yields are lower. So let's see if it gives me the 2 ticks. Okay. Move this up.
We're close but not there on inflation. And you did see
Come on. The ceiling is open. Looks like on the 10s as well.
So great progress, but we're not so we want to keep policy restrictive for now so that we can see.
We're definitely not there for 30-year mortgages, upwards of 7%.
I'm gonna give it another another half minute.
As we've spoken about, and as was brought up prior
Just because I'm not the last one in the queue as well. Yeah, not now I am. Okay.
You talked a little bit about how you plan to perhaps do that, and a timeline potentially. But how will the public, Chair Powell, be able to provide comments on any revised proposal as required?
Hard to say in this environment, to be honest. I prefer to be conservative. It's not the time for me to. It's not the time for me to increase targets. If I took a. I tried to take an extra tick at 10. Only 7 lots traded there. I wouldn't have been filled at all. I prefer to be conservative. This is the situation for today. Let me disable my own account. Filter. This is the situation for today. Minus commissions, it's gonna be up 5 ticks probably, halfway to the daily objective. If it wasn't for this one, it was a chase trade a bit. I chased it and this buy here. I might recover them. It's fine. Ciao Federico, ciao. I think the volume of the microphone is a bit too high. Let me drag it down. Maybe now it's better. Yes, it should be better now.
As written by Congress and as interpreted by the Supreme Court, in the past
Come va, Federico? I trade up to 3 contracts. Depends on the confidence level that I have. If I see the momentum picking up, like I had a trade earlier, you know, there is a pickup in volatility, and I individuated the lagger between the two. I might, you know, market in with one, put a limit behind it, and then eventually try to enter on either of the two where I have the lot left, you know, always with a limit probably. So let's say, for example, I want to short now, no? And I see the right condition to short. Might market in. This is something new that I didn't use, for example, in January because I was still adapting, but to not let it be left behind on every single trade that I take, because there is this teleportation on pooling we are having. So I might market in one here, put a limit above, and then if I'm ultra confident and the curve tells me that it's going to sell, I might as well add another lot on UB or vice versa, no? Up to 3. I rarely enter with 3 all at once, you know? At least for this challenge, because if I enter with 3 all at once, you know, I have if I enter one at a time, I still have some decent amount of control. If I put a limit behind it and ultimately it might sweep me out. For example, if I entered here at 8 short, and like I said, I'm giving examples, so not reading really the market. If I entered here at 0.8 with a market order and a limit order at 0.9, the stop for both would be 10, right? A stop volume 100. If I'm really wrong, I will put it to break even. If I take the break even, one zeros the other and I get out for 0, no? If I entered with all 3 here at 8 with a market or even here maybe, no? I don't have that flexibility. And having that extra, I might sometimes, not always, I'm not saying always, but I might try to hedge. If I'm really wrong and I see it, that I'm really wrong, I might to hedge. I will cover this, we'll try to cover if this one is for example, it's lagging, it's gonna be probably most the inverse. Let's say that I shorted here and I want to protect it. I might long with that extra contract to at least to cover a part of the at least a part of that loss. But it depends how much I am concentrated, if I'm gonna accept the extra risk. I need to be really focused to do it. Later, when I pass the challenge, when I don't have to deal with the end of the drawdown, etc., all that BS, no, I will start to increase the clip size when I build a bigger buffer, like exactly like I do with my own account, no. For example, on the Bund, my clip size is 3, always 3, never less, and I enter with all 3 and I add another 3, so 3 at a time. If I have the disponibility, if I have a large enough drawdown that I don't have to worry, the condition, the clip increases. If I had 6 slots available to trade instead of 3, the clips will be 2 at a time, probably, no? There was a time in November, December where the volume was very good, or maybe I will do it. We will catch the rollover trade. So instead of having UB here, starting from depends, probably another week or so. Instead of having UB and TN, I will have the next contract on ZB, so June contract ZB here, and ZN June contract here, and I will trade those instead of instead of the current month contract, no? And then we see. I tend to adapt when something isn't working. Like in January when I started this challenge, I was actually taking quite a break from. I didn't trade so much, and I started the streams, and I came to the market, and the conditions were different. And what I was using in December wasn't working, so it took me a few days, maybe a week to adapt, no, and find out that I have to be more aggressive, at least with one lot. Otherwise, it would have left me behind a lot more, no. The conditions are ever changing, always changing. Oh, Federico, finalmente a casa. Yeah, if you don't feel it really good, better not trade. You might be seeing, guys, here in the streams, I'm super conservative. I'm not having huge days. I don't risk much. I take it cautiously, and I don't have those days like the other streamers show you on YouTube, 1,000 plus 1,000 days on NQ. I'm sorry about that if that's what you expected, but that's not how I trade, you know. Base hits, cautious, enter only if everything checks out. Pretty much everything is based on what you see here, no? Painkillers could be a nice cheat code. Last year, around June, I have to admit, when I was still trading ES during the Apex drama, some days I traded on Lexotan because I have Lexotan for my I got prescribed. I don't take it almost never, but I got it prescribed by the doctor like 3 years ago when I was still a manager. It was very stressful. But yeah, it's generally not a good idea to use substances to trade. J-Money, this is Metastock Xenith. Metastock Xenith is part of a lot of other stuff. Wait, I will show you, for example. What is ashwagandha? Jay, if you want, on the YouTube, there is a video I made on Sunday, this Sunday, about this program, which is a part, so I don't have to switch the workspaces and everything to show you. And yeah, it's a pretty extensive macro and super useful for treasuries. Cannot say the same probably for equities trading, to be honest, but for me it's essential. It became essential to trade treasuries because I see the underlying bond, the cash bond market, you know, real time. This is part of the program. And then you have real-time Reuters news and multiple other sources. I'm not totally relying on news for my trading. So you see, I have this on another screen. This is real time. which you can use filters, economic monitor. I have other charts for yields and cash bonds. You can see time and size for the cash bonds, so they're underlying a better picture. A lot of stuff, super extensive. Hi Luna. Hi mate, how are you doing? How was your day? How did you navigate the CPA day? I have 3, Luke. 3 monitors, which I collected with time. I didn't, you know, the day I did start trading, I was producing music in my past life. So I already had a big monitor. And then I got another one, always for also for producing. And then I just added a third one, one 4K monitor, the one that you're seeing, the main one.
I think it's time to move on the ESLR. And, you know, we proposed doing so several years ago. We just didn't follow. I do think it's time.
An ultra-wide monitor on top, and on the left, vertical, another 27-inch monitor. Oh, that's good, Luna. Luna, you need to trade treasuries, so emotions will be changed for sleepiness and boredom. Yes, and NQ are super emotional. It's hard to for trading. Dealing with emotions is hard, and on equities it's even harder. It's even harder.
Would like to associate myself with the comments of the ranking member. Mr. Powell, I would like to compliment you for standing up to the president, for literally preserving the independence of the Fed.
You know, Jay, I made good money on ES. I consider myself a very good ES order flow trader as well as an NQ. I had super good stats, but then, you know, there is that day, the tilt day. So in November, when I was expecting the payout from FTT, in the same period I got denied from Apex, and I had another slightly more than 5,000 expecting from FTT, but then they gone bankrupt, they closed, and Apex denied me the payouts. And I already had a lot of payouts last year, especially for the first part of the year, because then since June, in June when there was the server problems, architected problems, made up problems, I busted all of my PAs, so I had a difficult summer, I would say. Then I got back everything. I got nearly 5,000 expected from Apex that I got denied for no reason, because I provided the videos and everything, the bullshit that they asked me, and they denied. And then FTT got bankrupt, and I said, okay, fuck the prop firms. I switched to trade only my personal account. And on the first day I traded my personal account on ES, I lost. And I said, did I subscribe an agreement with somebody to only trade ES for the rest of my life, or I can try something else? And so I tried. The transition was fast but gradual. I started looking at FESX and the Euro stocks, the Bund, alongside the ES, and then I gradually removed ES completely toward the middle of the end of November, and meanwhile I was already looking at the treasuries, and I don't know, the transition was very smooth, because the ideas are still the same. The order flow is almost the same, a bit, of course it's a different market, a different behavior, but you can actually read it, no? Much better. And it's much more consistent, no?
While he seems to always avoid the question of
Nice that you have bookmap. I guess that you are using the Trader Map Lite bot remover. It's a no-brainer. The filters are amazing.
I think that's a very sinister way of doing business, to require the consumer to fund tax breaks. I think this president knows what he's doing. I think
Over trading and over risking overall. You can over risk by over trading, no? Overall. It's hard when you on yes. I don't know about you guys, but on yes, sometimes when you have the tilt day, you start feeling hot, no? Starting feeling almost pain. When you start losing, you cannot accept losing.
The Federal Reserve recently withdrew from the network for greening the financial system, saying this work had extended beyond the Fed statute.
Treasury is good during London session. During Globex, the Treasury is open at an hour and 10 minutes before the equities. So, and all the rest is, and that is the regular trading hours. Of course, like every futures product, they trade 23 hours a day. But yeah, there isn't much liquidity. In the morning, the European government bonds lead the way, no? So if you want to give it a chance during that time, I would probably go and open Blue Sky account, because you know I don't trade any prop firm that doesn't have a very clear path to live, because they are just you know, Ponzi schemes. But if you open account with Blue Sky, you're gonna have the access to Eurex via Tradovate accounts, and I would maybe take a look at the European bonds. You see the range of movement is quite high and the volume is very high. The Bund is probably the third biggest traded contract in the world, the FGBL. It's very nice. This is what I trade on my personal account, those two, in the mornings. Why aren't you? Why aren't you copying every trade, everything?
Mr. Chairman, what steps is the Federal Reserve taking to ensure that new regulations do not force consolidation in the banking industry, therefore make it a little harder for smaller institutions to compete?
No, Luke, as I said, elite trader funding is another Ponzi, man. I mean, you're probably gonna get paid because they pay, but you know, with those terms that you never know. And I gave the futures desk a chance. I would say I wasn't even supposed to get back trading prop firms, but in terms of a project, a partnership, we are friends with them. We know the team; they are very good, and they have a clear path to live. And I did it both to have a bigger exposure to the markets and try different stuff, increase margins, allowance, and stuff like that. But yeah.
I'd like to say thank you for being here. Good to see you. And with that, I yield my time back, Mr. Chairman.
Gentleman yields back the balance of his time. The chair.
Just that after FTT and Apex denials, I didn't break any rule, by the way. Nothing. They didn't even clarify why I am being denied, because I had payouts with them. There is a cap. That's my guess. What I noticed with others as well. There is a certain cap where they start making you problems. I was very consistent with them. I've done my best for those payouts. They decided to deny. Sorry, goodbye. Hey, thank you.
Rules over at CFPB must be from time to time updated. Right now there is no system.
Yeah, but I'm really not saying that you shouldn't, guys. It's an opportunity. It's just I'm talking about my own experience, and I never anymore want to deal with something like a stupid rule or somebody asking me to record my screens to approve me a payout. No, no, thank you. I simply said my personal account isn't that big, but I said if I can do it with a professional account, I can do the same on with personal money and grow it from there, and take out the money whenever I want. That's just the difference. It's less stress for me. That's it. But I built my own account with prop firms, so I'm still thankful, no? It's still a good opportunity for everybody.
Sell 62 billion of 17-week bills. Bid to cover, that's 3.38 times. And a high rate, that's 2.45%.
On treasuries, with our deal that we have with EdgeClear, for example, for ZN, it's only 180 per contract on ZN, slightly more on ZB and UB, but the margins that we have are very, very low. Also, the commissions are great. Flipping tricks open to anything that will make me money. You know, some friend told me, because I was like every yeah, not to sound something, but I was great at trading, yes, overall, no, and equities in general. I recently also, in the last times, I was also using options gex with everything. We studied that on our server and all. And I was also, no, treasuries are boring, are slow. And then when I switched to my own money, I said, okay, I want something slow and boring, but consistent. Right. Powell is still talking. This is it for today. It's one loser, 3 scratches, and a few small winners. This is since the start of the week. You only take base hits. Only. Yeah, Sierra is a great software. Just hard to get used to it, but once you do, possibilities are infinite. You can easily build simple bots and alerts with Sierra that on other software you require coding, like on others. I have a few bots that I didn't update or maintain much in the past 2 or 3 weeks. But yeah, it's complicated, much more complicated. Simple bots mostly based on Delta. And also when you start coding things that you start understanding the percentage of discretion and feeling that you are putting into a strategy, that makes the difference. And it's difficult to translate discretion into something, to a robot, no? So what we doing here? 0.8 says always the same big level that we were dealing with previously. My guess was that were going to extend 8-10 ticks below and above. Here what we have from 0.8 slightly higher, lower. 16 here is 0.8 in fact, because bookmap on the ZN, because ZN is here should have another apostrophe. 7 halves, 8, 8 halves, 9, because it's quoted in 64ths or halves of 30 seconds, while a handle on ZB and UB is in 30 seconds. See, it starts on 0 and goes to 32. The notes, the 10-year is half of that for each 30 seconds. So 8, 8 halves, 9, 9 halves, 10, 10 halves, and so on. So it goes up to still 32, but with a half. Instead, bookmap has the handle up to 64. It's basically the same. It's even more intuitive to see it like this. The 5 and the 2s are halves of the half of the 30 seconds. It's total mess. It's a total mess. But I use them only strictly for correlation, so.
Long-term rates went up, but they did not go up because of expectations of higher inflation. No evidence of that. It's actually.
I want to start focusing on longer term stuff this year. Longer term or different at least. I want to look into spreads on the curve, like Gerard in our server got me really fascinated about spreads, but those are to play over months, weeks, months, and you play on the curve. It's still directional to some extent, but instead of trading the outright is like the CB contract, UB contract, ZN contract. You play the relationship between their curves. So ZB minus ZN, UB minus 5 year, and so on and so forth. There are a lot of them with different ratios. Also with the SOFR, with the steers, short-term interest rates, which I have down here on the left, with just the pooling and the stacking, and the tape. On treasuries, the curve spreads, so the curve flattening or steepening, but also I'm really interested in trading the VIX with options. So not anymore the indices, but I will trade options on VIX. Credit put spreads, butterflies, stuff like that. Because the VIX is mean reverting, so I always looked. Everybody who trades equities should have a lookout for VIX and the conditions that get created. Like the best conditions to trade ES for me were after VIX spikes. It was a short, but I'm too tired, to be honest. It was actually nice. 0.8 completely reacted. Imbalance. A 3 per imbalance here. Was distracted talking, but no problem.
What's the purpose for doing it? What if it has no impact on the market? Why are you doing it?
Sweep down. Selling pressure from above. Here nothing yet. There is more pressure from below, it looks like. But still we are in a range. Just extended a little bit more to the mean at 0.8. So essentially, if I will show you what a spread looks like. I will show you on a spread on the curve what it looks like. I need to copy this.
essential for you to carry out your mandate, keep prices stable, and achieve maximum unemployment. Over the last few years, inflation, as we all have witnessed, has come
Okay.
down from a high of 9.1%.
US President
Make
Trump
it
had a
bigger.
call with Putin Wednesday morning.
Title
The
bar.
report, it says.
During your tenure,
Alright, let me remove this here.
we saw the unemployment rate drop to a staggering 3.4% in 2023. It's the lowest
Remove
rate
this
we've
here.
seen in some 55
So,
years, and now it sits at around 4.1%, which is
TYC1 is the normal ZN contract, the 10-year, the US 10-year. Let's put it to 30 days. This is the outright, no? You trade it directional, up, down, range, whatever. But then you can also trade the relation because they are super correlated. But there are moments where the relationship between them could change. So, for example, the spread between the 10 and the 2 bonds and yields is used, for example, when the curve is inverted, there is a risk of recession like we had last year. So the yields for the 2-year are higher than the 10-year because normally if you invest for a longer term, like 10 years in this case, you should be rewarded more, no? But if the risk in the economy in this case is too high, then in that case the 2-year yields can go higher than the 10-year, so you are rewarded more to take a risk in the short term because you are taking risk, for example, of the recession. And there was last year sometimes the curve inverts, like anticipating a recession, but we didn't have the recession in the end. Still growth and all stuff like that. One of the biggest rallies in the equities markets and blah blah blah. But now let's do spread. So we can say that you can, for example, short here, you have an expectation that this is a failed breakout to the upside. There is no reason for the bond to go up because there is still uncertainty in the policies of Trump. The inflation might be soaring and the Fed is saying that they're not gonna cut at all, mainly probably this year. They're taking it longer, so we can interpret it that they don't want to cut. 1 month ago, 2 months ago, we were pricing in 4 cuts for this year. Now we are cutting 0. So no reason for the treasury to go up. Yields go up instead, and they have a inverse correlation. So you can short the outright, and that's it. But then if you want to do something different, and there are different strategies, you could let's do the I have printed a table of all the different 30 spreads that you can play on the treasuries. So let's do, for example, the normal TY versus TUC1, which is the 2-year treasury. And the normal here should be, the tooth is 2, 1, add. Did I do it right? So not only you can trade the outright, but this is essentially showing you. I did it inverse, right? Yes, I did it inverse. Sorry, guys. In front of the PC, since should do because it's inverse. TUC1, the 2 above, and TYC1 below. Right? Yes. This should be right now. 2 and 1. TUC1, TYC1. So essentially, when the spread is when this is going down, you have flattening. When this is going up, there is steepening. So yeah, I'm not gonna go in depth if somebody is interested, because I don't comprehend exactly yet, no. It's something new. But yeah, essentially it's an interesting way of trading. In this case, you would long 2 contracts of the 2-year bonds and short 1 of the 10. Catch you tomorrow, Luke. I probably have bored you to death. Is Powell really still talking? 3 hours. Give the old man a break, man.
But it's encouraging to know that they're finally interested in some level of data privacy.
But yeah, mainly that is for like trading the macro environment on a longer term, 2-3 months. There are some advantages in terms of margins and costs in trading spreads instead of outrights. There is an interview in the documentary, The Bull and the Bear, that talks about spread trading, the treasuries. Interesting. Spread trading is, for example, trading the short-term interest rates like the 3 months, so FR, against the 1 year or the 2 years. Yeah, Luna, for real.
Do you know what kinds of sensitive non-public information would this individual have access to in his role at the
Oh, nice, you're in South Africa. Cool. What are you, 4 hours ahead of from? UTC plus 5, 4?
Just assuming certain types of information from the role he's in, is there any idea if information was provided to the CCP,
It's
what
capped.
advantages would that give them?
0.8.
Without knowing what it is, I can tell you what staffers generally get, which is kind of the economic analysis that we do in advance of an FOMC meeting. And, you know,
Oh, so you're just 1 hour ahead of me. Oh, nice.
I don't want to sound like I'm dismissing them.
We are on the other part of the globe, but still in the same.
We really, the truth is, what we have that is secret is knowledge of what we're going to do in the future. And in modern central banking, the whole idea is to be transparent about what you're going to do. So, nonetheless, we take this case very seriously.
So,
to your question.
Yeah, and I appreciate it. This is not adversarial at all. I'm really just trying to get to what possibly the Chinese could have done and if they've done anything.
Conditions on the tens shifted a bit, so they're not talking about rates and stuff now. So we have this shifting condition. There we have strong bids staying here. That will never trade. It's better that they don't trade if it's a move above 0.8. So maybe toward this area. Of course, if this breaks, because ons got smashed down through it, no? Maybe it's gonna take another chance, but for sure if this breaks we get in like nines halves, probably. But this needs to go out of the way. Maybe it doesn't. If it doesn't, it becomes a short. If it tries, break, trade, doesn't go, then low interest, it goes over at 0.8, and the volume decreases, you get a sweep down, I called it. You get a sweep down, I would say it needs to stay bid like 0.7, 0.6 halves. In that case, if this holds at 0.6 or 0.7's bid and trades some volume, meaning acceptance, you still have time to short the UB or the ZB. Not saying that I'm gonna do it, but just a scenario. European bonds are selling a bit. London close is done. Okay. Also, if you trade treasuries, it's very useful to have the bond and the bubble, the 10 and the 5 years. The 10 and the 5 years often have to anticipate. I don't have the ladders from them, but I have the 30 with market pulls, volume pressure imbalance, and the 2s, the FGBS, the shots. Often they anticipate, but kind of the correlation might fade a bit after the London close. So 25 minutes ago. I stopped trading them so much into consideration after that time. Europeans go to dinner and they have a lesser influence, no? European bonds, by the way, are quite a better market than US treasuries. In terms of volume traded, there is a lot of pooling and teleportations on. Not that it is a problem, because if you have a strong idea, it's gonna work out anyway.
Visiting each other's nations, we have also agreed to have our respective teams start negotiations immediately. We will begin by calling President Zelensky of Ukraine to inform him of the conversation, something which I will be doing right now, says Trump.
The ceiling is open, but there is a nice absorbing now. A nice meaning that, okay. Said the short idea was valid only if we went bid 07s and accepting, and the short will be have been executed on the 30 years ZB or UB. I'm not gonna play the breakout for sure, because it's a range day. This thing can go up 10 ticks and I don't care.
Immediately, we'll also begin by calling President Zelensky of Ukraine to inform him of the conversation. He has asked Secretary of State Rubio, Director of the CIA Ratcliffe, National Security Advisor Waltz, and Ambassador and Special Envoy Wickoff.
Trump says he and Putin agreed to visit each other's nations. No, I don't use it, you know. I don't use it. I prefer to see it myself, because sometimes you know it's something automated. It sometimes might give you a false signal based on your thresholds, but definitely helpful if you want to use this more. But absorption overall is easy to see on the ladders, no? Not all absorptions are equal. I mean, meaning often, say for example, they keep buying 0.85, but it doesn't break. But the pace is constant, no? All blue, all blue. At a certain point, the boy that is here at 8 halves might release his iceberg, and that will provoke a breakout of the range. So absorption is never to be taken blindly. After absorption, to validate the absorption, there must be opposite intention. So if this doesn't break, and the buyers that bought here, that they stop 2 ticks, pussy out and start closing their longs, they will provoke a sweep down. So they will panic because they cannot break. They are underwater. We are talking about boats, big fins, and stuff like that, no? So generally, the move away is key. You see the move away, it might attract more selling, and only at that point you are giving away the edge of these 2 ticks, you know, for a great entry. If you are aggressive, you can bet on that if you want, but yeah, I'm more cautious way to see it. Even also on ES, absorption on ES can be scattered across multiple ticks. For example,
however, I still have concerns that we are not fully optimizing the use of CRTs.
yeah, definitely, man, definitely.
Mortgage risk, CRTs have successfully shifted risk from taxpayers.
On ES, the absorption might not be a single level because it's illiquid, it's super illiquid nowadays, and if you get a big spike, it's gonna be, it determines the thickness of the book. So it might be across multiple ticks, no? You start seeing a battle across 3-4 ticks, no? A small range. The spread is gonna be, let's say, the spread, the two-way auction, the range, whatever we want to call it. You will see a battle, up, down, slight extension, but with always the same pace, no? At a certain point, there will be a winner out of this range, and it will provoke momentum. And the momentum being a very fast increase in pace of tape, in velocity, so a sweep down that will eat up the levels. Generally, it will turn back toward the area to give you a chance. This is Northern method. I have my own version of Northern, not pure Northern method, but that's the idea. You have to validate validate the move with intention rather on a fast market rather than passive behavior. It's quite different, but it's than slow markets. But I still use a more cautious approach, looking for absorption intention before making my decision, giving away the edge here. No, there wasn't intention. So this is not a short, it's slowly churning out these levels. If you have the sweeps indicator on Bookmap, you maybe want to take a look at, side by side the DOM Pro. The DOM Pro was developed by somebody on our server, by the way, Quant Scalper. You want to have them side by side, for example. You could use like the sweep indicator. It will show you the areas that I'm talking about. Yes, it's also very mean reverting in the short term. Generally when there is a move away from a range, 90% of the time, if the stars are aligned, you could fade that move back to the mean, back to the range for a quick scalp. It was my bread and butter trades. Yes. In terms of order flow, actually, Bookmap is is only second to TT, to be honest. Maybe we can put Sierra in between.
Corporate America follow as well. Chair Powell, as the federal government and companies move to end work from home policies and bring employees back to the office, how do you anticipate this shift will impact key economic indicators such as productivity, urban commercial real estate markets, and consumer spending patterns?
That's a really good question. I'm not sure of the answer. I've always felt that I am personally more.
And then DOM Pro, what is nice in Bookmap too is Bookmap was born. This is the story that I know from the guy that developed the DOM Pro, no? Because he's working with Bookmap since a lot of time and still working on developing, for example, the new copier, etc. He was one of the guys that pushed for it and tested it and helped in development the new multi-account stuff. Bookmap was initially wasn't made for retails out to the public to purchase. It was custom made for an exchange for algo trading, for fast. It was made to be fast, process millions and millions of data points per second, be fast and reliable. And then, for a reason for another, it was acquired by another company, and Bookmap was born. But still, in the core, in processing data, it's very fast. And they are also working again on algo trading functions. And for the moment, you have 3 execution algos. You have the chase, which essentially which is really helpful in certain conditions, if you are trading the order flow. The chase, let me see. Chase, escape, and execute. Chase, where there are escape, execute. Basically, escape and execute. Escape if, for example, I put my limit here, no? But there is an order book imbalance, so the bids are pulling too much and the asks are stacking, so there is selling pressure. It will cancel the limit or move it away. Chase will do the contrary. If I have a limit order that is like far away, like here, but the conditions are super good for the long, it will try to chase it, no? Until the conditions are good. Then you have the Execution Pro, and the Execution Pro has an advanced version of the execute algo, the pay up, which comes from, it's copied from TT. So say for example, I often trade the best bid offer, I trade the spread. So I want to take this because immediately if I'm filled here, potentially I'm already one tick in profit if I get out of the spread, no? On the ask. If for a reason or another I have my limit here on the BBO, on the best bid offer, on the best bid, and but it ticks up, it will, until a certain amount, it will pay up, meaning that it will try to execute me at the next one, so I still have the new edge of the spread from 18 to 19, for example. I might have been filled at 18, not always, because trading treasuries, for example, you have to deal with, try to get the better Q positioning you can, or anticipate much more than I do to get filled. But yeah, you get the idea. For example, I want to enter here, it sweeps up, it gets offer 21, it will try to execute me at 20, for example, if I get no fill here, or vice versa, no? Oh, Jesus. Starting to be tired. European bonds are doing nothing right now.
This is not a small thing, but you have to sort of filter out the chaotic noise and the guidance that varies hour by hour.
Today is a highly volatile day. Let me check out how the VIX looks like today, because I might do some of my exceptions to not trading equities. I have
that no one knows pretty much what the exact policies will be. That's still evolving, and so
not even that much. It should do. How does it look like? Okay, it's been enough directional. So I guess it is very directional in terms of
If that sort of analysis,
Gentleman's time is expired.
Congress, it would be great.
The gentleman from South Carolina, Mr. Norman's recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you, Mr. Powell. I appreciate you coming and addressing our body. In 2011, Vice Chairman Yellen made a statement about the concern about the long-term debt situation and the imbalance that we have with our budget. In the fourth quarter, when she made the statement, the federal debt held by the public was, as a percentage of GDP, was 64.75%. Now, the same debt to GDP
Okay. Might be.
was 99% at the end of
Because we had a quite directional day.
Do you express the same concern that Ms. Yellen had about the severity of where we
Might try the close because the volume is also quite heavy by now. The delta is quite directional, and I like to trade the last 30 minutes on yes. Like if you are an order flow trader, you see the nuances of when the pace is picking up at certain moments during the close, the last hour, the power hour, or the last 30 minutes. And you can just go with the current flow because it will be really one way-ish, let's say. So maybe for 10 minutes there will be only selling stops, buying picks up, and it's the moment where I look to fade the previous direction in the new direction, looking for a decent entry for some quick scalps that tendentially easily run to profit.
I guess some assurance that we're going to get our house in order.
So I don't have a specific number.
It's a nice day.
But I will say this: in having looked at
Recovered almost all of it.
the successful plans programs to get back on the right track, they tend to make progress over a long period of time. In other words, you've got to get to a place where the economy is growing faster than the debt, and then you need to stay on that path for 20 years. This is not the kind of thing where we can fix it overnight. We just need to be making progress. And right now, we're running very large deficits at a time of full employment. So we need to.
Yeah, I try today. I'm not too tired.
Right now, we're not. So the key thing
Just one or two mess
is for it to become a big issue.
or NQs, whatever. The idea is the same. Yes, and NQ move the same.
Only be done on a bipartisan basis. Only. These are things that need to be dealt with, not be dealt with by one political party. Believe me with that.
It's going to be a tall order.
It only grows.
Alright friends, I think that it's enough for me for today with the stream. I'm gonna take a break because I have a call later with somebody else as well, and cook something for dinner, and yeah. Catch you tomorrow, guys. Thank you for participating.
We're seeing things that are being
Be safe and have a nice one.
never imagined we couldn't get to. Now he's exposing that. What level of growth do you think, with the confidence growing under Trump, that we will be able to reach this year and the years after? Because the 20 years you're talking about, we've got to have a pretty